This spreading also to now European banks. What's the exposure of those bad loans? What do you do with Italy today?
At this point in time, we're pretty cautious on Italy. We think that we've now created a range, so seeing their budget come in much higher than was originally expected, there's going to be some tussling between Italy and Brussels now, and so how that plays out over the next couple of weeks is going to be really critical, so we're cautious.
What's interesting, though, is that if you hedged and freaked out every time there was some sort of political issue like Brexit, like the French election, like the U.S. election, and you played it that way, you got hurt. So in that context, it feels like it's a buy in Italy story based on history. Why would this be different?
Well, it very well may be, but the question is the entry point and what value you're getting for that. So to your point, we are seeing spreads at pretty wide levels, certainly the widest since we've seen since 2013. Mm-hmm. But the problem is there's going to be a lot of back and forth over the next couple of weeks. So we think that buying on the dips right now is not a very prudent approach.
Yeah, and I'm glad you brought up 2013. If you come inside the Bloomberg here, you can see the BTP Bund spread. Yes, we've seen an increase. 275 basis points is where that spread sits right now. But like you mentioned, nowhere near we saw in 2013, 2012. How much more risk premium, or what's the correct risk premium for this spread?
Well, this is really difficult to assess right now because, again, there's just so much uncertainty here. So you've got the potential breakdown of the coalition. You've got the elections next year. So there's a lot of other uncertainty here in the market. And I guess a backdrop where global growth may be a little bit precarious and slowing. So this is the real issue, is it's not just about where spread levels are now, but what are the implications as global growth slows still further.